Peter, you've been expecting this downturn for a while, and now you're turning tactically bullish. What does that mean?
Hi, Sarah. Yeah, when we talked around Christmas time, the theme we've had here at Axonic has been higher inflation would eventually lead to a hawkish Fed pivot. Came a couple months later than we expected. But the damage from inflation to company margins, for example, is starting to show this quarter with the companies reporting so far, as are the supply chain disruptions. When markets correct, which I think we're in the beginning of a longer correction, we've actually shifted into sort of a sell the rally kind of mode. But when they correct, there are going to be opportunities to take advantage of oversold conditions. And I think that's where we are now. We've had a 3-day VIX futures curve inversion from first to second months. And I have some soft indicators I use, which is called the number of calls that I get from the media about whether a bear market has started or not. And I've gotten a number of those today as well. And then lastly, all the people who never saw the possibility of the market taking a turn for the worse are now seemingly on board with the fact that it ought to on a hawkish Fed pivot. So when you combine all those things and everybody is on the bearish bandwagon now, my experience has been that means it's a bit overdone.